Hello traders, it's Samurai Trader here. Welcome to this session. In this session you're going to watch a recording of me scalp and day trade the 6J plus for 4 out of 4, but then a couple of minutes ago, as I'm about to show you, I just recorded another trade here live as I was about to record this video. So I'll show you both recordings and go through those with you and explain exactly what I'm looking for. As always traders, I do need to put the disclaimer up. There is a risk in trading. Don't trade with money that you shouldn't afford to lose. Bottom line is start on the simulator. There's no need to rush out and start trading live, and you'll hear me say this in every video. The market's going to be here next week, next month, and unfortunately so many traders have false expectations. They think by watching a video or perhaps reading an article that they can start day trading. I learn something new every day, and I've been trading for 28 years. So some of that knowledge, by the way, I'm going to pass on to you today. You'll also hear me talk about this regularly. What would be a game changer for you? $100 a day on 10 lots, it's $1,000 a day or $5,000 a week. That would be life-changing to most families. What I'm about to show you is that on the 6J, for an example, just for $100 net, that's only 16 net ticks a day. And I'll show you where you could have been taking these trades one after another in a row, and I'll show you the entry signal, which is an arrow. It makes it out plain as day where you should be taking the trade, except you've got to make sure you're applying discipline and patience and you're trading with the trend. The challenge, traders, isn't finding the setups. The challenge is having the patience to wait for the setups and then execute the trades themselves. Now the 6J, many people have never heard of the 6J. It's actually the yen. Of course, we've got the spot market, the Forex market, where you've got all the different currency markets. What the CME did, they packaged or made up a futures contract. You've got the 6A, you've got the 6B, you've got the 6E, and you've got the 6J and other contracts, whereby effectively you're trading a futures contract, which is modeling exactly what is happening on the Forex market. One of the huge benefits of trading the futures contract over the Forex contract is there's no spreads. You've got a fixed contract value. There is there's what's the word for it, no manipulation. So in my opinion, as an ex-Forex trader, it's a major benefit and it's a great market. Okay, sounds good so far. The next thing is, what about the volume? Now typically you've got around the 150,000 in volume. Now we've got the 6E 100, which is in this case here has a higher volume, and the 6B than the 6A, but what I'm looking for a market that gives me the waves, we want to see the volatility, and that's one of the things that you'll get from the 6J. You get these fantastic waves in the market, and basically we want to surf those waves. So the 6J, it's $6.25 a point or a tick. It's basically like half a pip, if you like. And let me just briefly run through this here. Now I don't want to lose you depth, but down here something I go through with my members, but if you're going to trade the 6E, the 6J or the 6B, these three, they're all $6.25 a tick. Now this is where I know a lot of you don't want to hear this. Okay, I know you don't want to obey the money management rules, but here, if you're trading with say an 8 tick stop loss, which is $50, you need to have a trading account of 2,500, because if you have a loss of say 2%, that's $50 plus the commission. If you're going to trade the 6 tick, which you can easily trade, which I'll show you, that is with a 6 tick stop loss, okay, you only need an account size of around $1,900. Unfortunately, there's no longer any micro on these, and you do have a micro on some of the currency futures contracts, but the volume is so low, it's just not worth trading. You get a lot of slippage, and so I'd stick to the big contract. So if you don't have between 1900 and 2500, maybe this won't be a market for you, but the setups I'm about to show you, you can apply to any market and any time frame. Now another reason you should consider trading for 6J, now right now it is 1:41 a.m. Central Standard Time. So what we've got, basically in 20-30 minutes time, we're going to have the London Open. So I've just taken these screenshots here. So what we can see on the left here is the ES. Okay, so if you look at your buy sell bid offers there, you can see your volume 30-40 contracts, but look over here on the yen, 1,300, 500, 1,770. So up there 1296. You can see you got fantastic volume. Now it's a bit of a lumbering giant, but that's what you want in a way. That is, yes, once we get to the London Open, it'll probably really start to move, and that's where you might jump up to say a 2-tick. You'll find that 99% of the time, if you trade a Renko chart, you can trade the 2-tick. What I'm about to show you here, the 4 trades I took was on sorry about the English, was on a 2-tick. The trade I just took just then, which I'll show you live, I'll show you the recording, that was a 1-tick. If the market is slow enough, trade the 1-tick, because it means you can have a smaller or a tighter stop loss. It means you get in to the trade even earlier. Now here's what it means. If you're going to be trading, say, the 2-tick, and if you go for 5-6-tick trades a day with up to an 8-tick stop, you're going to need around the $3,125. But traders, as you can see here, okay, that's when we're getting up there with our stop losses. But if you trade it correctly, and as long as it's not pumping or too fast, you can get away with a smaller account size. So right here, that's 5-6 step trades a day, and within 14 weeks, look at the potential weekly income. This is a true potential of this, but I'll show you the 1-tick in a minute, because in slower markets, it's fantastic. Okay, so just down here, if we wanted to achieve our 14-week goal of hitting our 12,000 a week, over here, if we were to go for, let's just say, 6-step scalps, you would need 5 net trades a day, or 4.1, and I'll show you what I mean by 7 steps. It's really a 7-tick move that we're after. So with this, and I'll just quickly show you the charts here. So we rallied up, this is what we call a 3B. I then added to my position here. We can see here we got a beautiful downtrend, and this is actually where I should not have taken that trade. I should have waited for that, and the reason being, see that light blue line and up, and see the white line. Now there I had great momentum, but what I had there was I was selling right at yesterday's open. These are what we call pivot levels. So you've got your traditional floor pivots, which you bounce off, and then you've got your open, high, low, and close. You've got opens. These can act as support, resistance, major support, resistance levels. In fact, you'll see in a recording, I then bounced, and whenever I place my stop, it's 1 tick above, 1 tick above, 1 tick above, 1 tick below, 1 tick below. Okay, and so I entered this trade, got out down here, but really when I did sell, I was right hard up against a pivot. Right, it's a bit like running into, or can be running into, a brick wall. Now then, the trade I just took, and I'll show you the recording, we'll actually look at the live chart and just see, I can see what it's doing on another window. For members watching this, here, this is your plain vanilla bet the farm. Okay, now what we can see here, follow the cloud. See the arrows there? Now these are all your potential entries. Now see the white line, see the black line, that's my trigger line. So it's telling me here, do not short, do not short, do not short until up here. And in fact, it's a very deep pullback, so I didn't take it. What I do is I wait for divergence in the direction of the trend, and as you're about to see on the video, I'll point this out in the video. You'll see me going like this. I've got 2 pivots here, and you'll see I had my target, my final target, right at the pivot. And as you're about to see, we then bounced straight off that pivot. See how we come down, we pushed through by a couple of ticks and we bounced. The reason this is important, traders, we see this sort of price action day in, day out. Now if you wanted to net $100 a day per contract on this, once again you only need 16 ticks. And so what that is basically 2 6-tick trades a day and 1 by 7 tick net, and that would give you your net $100 a day plus. I'm inspired by the movie Moneyball. So in the movie Moneyball, they talk about not going for the home runs, just get to base. And to me, that is scalping. We just want to scalp, get in, get out, get paid. Now as we trade, these are the areas that we really want to be looking for. So we're going to go to the recordings in a moment and look on the chart, but we want to be checking out where are, and I should point out, we have indicators for all of these and they plot automatically. So the beautiful thing is you go and set them on your charts and you can see that you're buying and selling into these areas. It's just a matter of knowing how to buy and sell into them, how to manage the trade. But where are your pivots? Where's your open, high, low and close? Where's your major EMAs, your intraday highs and lows, and your current day's high and low? So let's go to the charts and have a look at this. So first of all, let me just show you the live trade just here. So this is current price action. You can see what the time is down here, quite slow. I actually got 1 tick slippage here. I only meant to have a 6-tick stop, but I ended up having a 7-tick stop, and I targeted the pivot down here, as you'll see in a moment on the recording. So let me just show you very quickly this recording and we'll flick through it fairly quickly. Okay, so this is the trade up here. I was getting ready to put it in. I was getting ready to record this video and I saw this setup. Bet the farms are fantastic setups. So you'll see I just hid the, in a moment I'll turn this bar status indicator off because it's a bit hard to see price action, but I want you to notice down here we've got the pivot. And just one moment, oops, where'd we go? Just here. And so let me just fast forward this so we can see we're coming down in a moment. I've brought my stop down, it was a couple of ticks above. I'm looking at this down here, and what I just did there was to scrunch up my charts. What I'm looking for, traders, here is what's below here. Do I have any other major support resistance levels? Like if I do break through this pivot, what I then look for is what I call a breakout pullback. I look to break below the pivot, pull back, form a lower low and enter again. Now these trades here are just black and white rules based trades. Okay, so the deeper the pullback you get, the more likely you are to have this is like what I call a two-legged pullback. You're more likely to have this, and if we had a shorted there, you would have been stopped by 1 tick. Now did I just put, now there you probably see me going backwards and forwards. I don't have the pointer on. Now I do have. What I'm pointing out here is the pivots down below. And the reason that's important is that quite often we will bounce off those levels. So that's where we want to keep an eye on those. Now what could we do to protect ourselves? Well, number one, don't sell or buy if you're hard up against the pivot, or once you hit the pivot you can always get to break even. So there's a number of techniques that we can actually use. Okay, and actually got that wrong. You need 2 net 6-tick trades a day and 1 7-tick. So I just need 1 of these and 2 other little scalps. That's all you need here. Now let me move this along, just go along here. Now what I'm doing there, and I'll do it when we go back to the chart, I'm just pointing out all the potential setups that we've got. So we'll just move along here, move along. We're about to hit our target here. Okay, about to come down and hit this. Now if I had have hit the pivot then started to reverse, I would have immediately brought my stop down and locked in 2 ticks. So I'm watching very closely what's going to happen here. Now here, like over here, we punch through. Here I'm thinking, will I punch through? And so I could have actually gone for a larger target, but quite often that doesn't end up well, so I prefer to not to be greedy. So there we are, we're now filled, we're out. If I'd have just touched that there, I would have then gone to break even plus a couple of ticks. Okay, and then we bounce. Now you'll see, why do I want to exit? Well, let's go now to the live chart. Why am I so pedantic, or whatever, pedantic I should say, excuse my English there. Look at that. So we bounce straight off the pivot, and for members watching, you can see there you've got a T10 long. Now, so this is why we have to be very aware of where our pivots are. Let's now have a look at this here. So it already started trading here, and I thought I might just hit record here. So what I had there was, it's called a T10. All of my setups are all pattern based. Okay, and as the late Mark Douglas would say in his book, if you want to succeed as a day trader, seriously, or even learn how to master the art of day trading, trade patterns. Patterns that, because as humans, we're very good at picking patterns. So this is what we call a T10. I'm just checking here, matter of interest, what was happening with Fibonacci levels on. It's not in any of my trading rules, but it's always interesting just to see where fib levels may be, and it's always great if you get a setup and you've got a fib level. So just here, this is called a 3B, by the way, and this particular one, see that thin black line? That is an EMA from a higher time frame. So I'm bouncing off EMAs here on my entry chart, and I'm about to add to this trade, and I'll explain why in a moment. So that's a loaded trade. Now T10s, which you've got there, note the angulation. This is called angulation. When price action moves down very solidly like this, you get quite often very deep pullbacks, and that's why with that bet the farm trade I just showed you, I did not take the first trade entry, because you'll quite often get this sort of effect. It comes up, pulls back, and then continues. Now this here, I'm about to add to this position, because what I've got here, it's called a 2B slingshot. Just note down here, we've got yesterday's open. This up here, this is a Camarilla pivot. This is yesterday's close, and this is yesterday's open. So I might just fast forward this along a little bit. So now you can see here, I've actually already added, so now I've added to my position. I've shorted again here, because this is a very high probability trade. I'll just move this along a wee bit. Now as we're coming down to the pivot, I can't remember what happens here. Now if we stall, or if we bounce, like see this this 8 contracts below here, that's where then I'll bring my stop loss right down. And because quite often, even though they're not official pivots, yesterday's close, here we are, we got filled on that, yesterday's open, these act as very, very strong, or can act as very strong support resistance levels. Now here it is here, I'm now bringing my stop down. Now I'm back to exactly break even here. So usually and here, well, there we go. So I brought it down by 2 ticks. Usually I'll bring my stop down by 1 to 3 ticks to cover the commission. So if it does bounce, at least then it was a free trade. Now here it actually touched my target, but I haven't been filled yet, so you can't really probably see that, but it's about to touch my target. Now I'll explain these other potential setups in a moment, because what I've now done for NinjaTrader, I've now had these coded. So I've actually got arrows will point, ignore not those ones there, but I'll have arrows actually point these out, and I've now got an auditory alert, and it just makes trading a lot easier. If you're half asleep, it can wake you up a bit if your alert goes off. So I'll just move this along so we can see we hit it. Now as you can see there, I've got a couple of ticks locked in, and just there we had popped down. Now what I was doing just then, which is absolutely essential, I'm looking at my higher time frame, and I've shorted again. Oh, that's right, I've got 4 trades here. Okay, so I've shorted here again, and this is an error. So let me tell you what I've done here. I've gone short here right at the pivot. I'm 1 tick above. Okay, so to short so hard up against the pivot, unless I've got a really great trend, or a great wave with some divergence. So this was actually a mistake. I should not have shorted there. Now you'll see in a moment, we come down to it, and you can already see we bounced here, we had bounced there. Now we'd think the probabilities are increasing that we're going to get through. They are, but it's not an 80-20 trade, and as the late Dick Diamond would say, if it's not an 80-20 trade, I don't care for it. And so you really want to wait for the best of the best, and that's when you've got room to get to break even or take profits. And here my stop loss is 1 tick above, and I typed that in. I'm expecting to get stopped out here, by the way. What you'll see here, and it's a mistake, so I run a live trading room and I run a coaching room where I coach traders, and of course have the live trading room as well. Is one of the challenges a lot of traders have is when they come down to these levels and they're hoping the market's going to reverse, they'll keep lifting their stop loss up. Murphy's law is the time they start doing that, the market keeps rallying, and they have a larger stop. It gets larger and larger and larger. What's important, the stop is a stop. It's so important. Now one of my members, John Y from Canada, he typically nets around $20,000 a day, and he sent me an email some time ago now where he showed me he was up close to 10-15,000, but then he started fiddling with his stops and he ended up 38,000 down for the day. And he wrote me an email, he sent me an email to share with other members, which I did, just on how foolish he was that day by changing his stops. And with that being said, sometimes the greatest mistakes we make in our trading are after we've had some really good trading days. We can get cocky, we can get flippant. Now eventually, as you can see there, that tested my stop up here right to the tick, and I should have known better. Once again, traders, it's okay to make mistakes as long as you don't make the mistakes consistently, but you're consistent with managing the right trades. So you can see here I'd end up punching through a nice trade. Now we're through it, and I'd be looking for another setup over here. And once again, I've got very mechanical trade entry rules. Now let's just go back for a moment, back to what's happening here. So see that white line just there? That's telling us we're not interested in any of these shorts yet. We're probably about to though get a potential short up here. Yesterday's close, I've got my major EMA, but it's not until we get the alert. And the right here, the trigger line, I call it, it's based on square root numbers. It was actually designed by a mathematician who's also a trader back in the 80s, and if you have it to the right setting, it picks, like on the next candle close, it'll probably probably give me the arrow. It picks turning points, absolutely, and see that there. So there you would have been in on the close, or could have got in on that close of that fourth candle. Now this is where though you have to be very careful with your trading. Remember this one over here? I mentioned we had this pullback, and we had like a little two-legged pullback. With these, and these can be very tricky. They're not an 80 or 90% trade setup like a lot of our setups, because you have a new high, and see your EMAs just down here quite often will come down and bounce from these. So this is a higher risk trade. Now if we did take this particular trade on the 1 tick and we had our stop loss 1 tick above, we've got what we call a 6 tick stop loss. Now remember before I mentioned you only need 2 6-tick trades and won 7 net. So what you want is a 6 ticker here, or maybe 7. Of course you might want larger trades. Like here, you can use your trigger line here to actually trail. Now what I want to show you is this. So this is your typical trading day. Now what I want you to notice is your EMA bounces, okay, and where's your stop go? 1 tick above, 1 tick above, confirmed by, see the white paint bar there? That's called my super scalper, and you can't see your arrows there. You want to follow those in the direction of the trend. Now of course we'll then get counter trend trades, but if you're a brand new trader, remember you only need, traders, basically 3 of these a day. Now here's one you would have been stopped on. Okay, now how you avoid these ones being stopped, you go for your slightly deeper, see that there, we call it follow the gold. So if you go and take your EMA bounces off for gold there, you are much more likely to have a successful trade. But back to this. So here we're 3 ticks in, but what you'll see quite often is we bounce here. Now we could punch straight through. Now that's now 1 2 3 4 5, and it looks like this is going to be a 6 ticker, so this may continue. Okay, all right, this explains it. It's now 8 a.m. in London, 2 minutes past, and the market's just opened. Now when the market opens, and this is a trade here that I would not wanted to have taken right at the open, and the reason being 8 a.m. in London, sometimes when that opens it goes crazy. Okay, so the London stock market is actually 8 a.m. to coincide with the other European markets, but this is where quite often, as I mentioned, we get a bounce, but quite often that can also take off like a rocket. So traders, and that spreadsheet that I showed you earlier on calculating, you can go down below and download that if you wish, and I've got some other goodies down below. Better still, why don't you come and join my live trading room and my coaching room, and let me teach you how to day trade and how to scalp and day trade. Okay traders, thanks very much. See you in the next video.